Hey everyone, we're going to be going through a property market update around the grounds of all of Australia. We're going to be hitting every single capital city and looking at the data. So what we've got as well is Jeff has been on the phone all week calling up property managers. So this is just not, data on a spreadsheet. This is actionable insights that are out there. What is happening in Western Australia? I'm currently here right now doing a boots on the ground adventure. What's going on in Logan? What's happening in Victoria? What is the property market doing there? Is it bubbling and gurgling? We're going to be looking at the national trends. We're going to go through a whole heap of charts. So if you're on the podcast, you're probably going to want to sign up to the YouTube. We talk about what is happening in Australia, what is happening in each city. Hey everyone, my name's Joe Tucker, and together with Jeff Miles, we created AUS Property Investors that has over 70,000 property investors. We are the largest in Australia because we get amazing guests, amazing insights. This week, it's Jeff and I going through Australia's housing trends and looking at the best outcomes for all property investors that come along the ride with us. Okay, guys, just before we jump into the session, I just wanted to make a slight amendment on some of the data that we showed throughout this presentation. We showed this information here. This is the household income ratio for dwelling prices and household income. This is obviously a little bit out of whack. So this is based on the ABS data. We didn't want to show the average weekly ordinary time earnings. We wanted to show it annually. So all we did was times it by 52 to get the weekly and then multiplied that by 2. That is not the correct data. That's not the correct way to do it. So that is why these numbers are a little out of whack. What is correct is the percentage of how much people earn. So you can see that WA earns the most, then ACT, then New South Wales, then Victoria, then Queensland, etc., etc. That was the purpose of this slide, to show you that other states are earning a little bit more than what you think they are. But that data is a little bit incorrect, but this is the correct data, and if you really want to dive deep into it, it's all there for you. If you've got any questions, got any comments, throw them in the comment box below. We try to answer every single one of these. And let's get into the session.
And we are live on AUS Property Investors. We bring the big names and we have the big fun. And you're probably wondering why we're late. This is take two, everybody. Take two. So make sure you let us know that you are seeing us. I can see that. Yep, the audience will be rolling in soon. So Joe, how are you going, mate? What's happening? What's happening in Joe's world?
Mate, I'm fantastic. I'm bloody fantastic. We are doing a boots on the ground trip. You can see that this lovely flora and fauna here is not my own. So yeah, we're currently over in WA checking out some of the locations. Where I was buying in the past 2 years is now not where I'm buying. The market has shifted over here. But there's still, we're going to go through data, right? That's the whole point of today. We're going to go through the data, the analytics. Where is the property market going? What markets are trending? What markets are trending up? What markets are trending down? What markets are trending sideways? And where is the opportunity in these markets? But I'm well, mate. How are you? More importantly.
No, I'm fantastic. This has been really fun last couple of days for me since we've pivoted and had to get to a session, create a session which has involved me spending about 10 hours plus speaking to property managers and collating that information. So because this is probably, we were talking before the show, this is likely about sort of step 8, and I've just created that step 8. It's not necessarily 100% step 8 of the due diligence process. So this is, we'll sort of talk through that as we're going, but it's going to be really interesting to share the information that I've gained and just been very lucky and privileged to speak to some of the top property managers across Australia. And so it's these sort of questions you should be asking your property manager, but also we've got the around the grounds, we've got the core logic sort of numbers and unpacking those. So it's going to be a huge session. So, but
yeah. Well, that's the biggest thing. I think people don't realize how much energy, work, and effort that goes into presenting a show like this. And tonight, the insights are going to be really good because what Jeff has actually done has spoken to multiple property managers, throughout every single state for them to break down what they're seeing from a rental market perspective, which is unreal. So you're going to get the instant on the ground. What was interesting is some of them were very bullish and a number of them were, I don't know, it sounds a little bit not so bullish. There's segmentations of the market that are doing strong and segmentation that aren't going as well. There's a funny little quote that I think sums up this little strategy session that we're going to run through today is what was it? In God we trust. Everyone else brings data. That is what we're going to be covering tonight. Data. Now, if you are listening to this on the podcast, I think it's going to be a better experience for you. I know it's going to be a better experience for you if you are on our YouTube. So if you are not a member of our YouTube, jump on there, subscribe, like, do all of that kind of stuff. But it's going to give you the visual representation for all of these charts and things that we're presenting to you. So I would say do that first. Jump on there, like it, subscribe it. But everyone that's live right now, jump in, throw any comments that you guys have. Let's get it going, mate. What's the first cab off the rank? What are we talking here to start?
I believe for those who don't know who we are, should we introduce ourselves, Joe? Or is that for those who don't know us by now and haven't been tuned in? So I'll introduce Joe because it's a bit awkward, a bit weird to introduce yourself. So you are Joe. I think you've absolutely setting the property world on fire in your own sort of investing and sort of helping others. But you are an accomplished professional. I'd say over 15 years of sales experience now. I mean, I think we're all sort of selling from a pretty young age ourselves, but that's another conversation. Research and negotiation are your sort of specialty, and you've formed that and morphed that into property. And you also sort of love a bit of tech as well. You're often on ChatGPT on weekends and late nights. Or if you want to know what Joe does in his spare time, it's probably technology related or property. But so as well, for those who don't know, you've got your multi-million-dollar property portfolio. You've got your passion for investing. It's been there. But you've created let's say Australia's Facebook's biggest property group, co-founder of that, and of course you're the founder of Property Principles, and you, I suppose, bring unique data insights along with your industry. So that's you.
Bloody hell, mate. Jesus. Thank you very much. I haven't got such quite a nice little intro there. Yeah, Joe at Property Principles, buyers agency. That's all we do. Find, negotiate, secure amazing deals. But who is this guy? Who is this Jeff guy? He doesn't even have a last name. His name is Jeff Miles. He is co-founder of AUS Property Investors, the platform that you guys are on right now. It is Australia's largest property investment forum on Facebook, with over 70,000 members. Jeff was previously a mortgage broker. Before that, he was a property developer. Before that, he was a property investor. Jeff has his own multi-million-dollar property portfolio as well. We created this platform purely because we love talking about property and we want to get property experts on and dissect their insights. This week, we don't have a guest, so we are doing all the dissecting. Now that I'm in WA right now looking for amazing investment opportunities, because you can't just rely on the data. We have this FAB framework, which is fundamentals, analysis, and boots on the ground. You need to create a hypothesis on the computer, on your keyboard, on your spreadsheet, identifying where are the hot spots and where are the not spots from a virtual world. But the most important thing is doing your boots on the ground to identify and confirm the hypothesis that you built that yourself. So this is all about data. So let's do it, mate. What are we talking here?
You sounded very excited about data. So no, for me, we're going to go sort of macro. You've got the core logic, and we'll sort of talk and pepper in our insights of what we sort of are seeing broadly across the cities, which I think is important to sort of determine what your sort of understanding of the city based on the macro and that data. That's fantastic. And to overlay all that sort of stuff, which we're not going to talk too much about because I'm not an economist. I try and play one on the internet sometimes and do it quite poorly. But interest rates yesterday were on hold again. So there's a couple of variables, and even sort of talking, they're not even, the next time they meet in early May, I would be very surprised if they get even anywhere near close to a dropping of rates in next one. So that's kind of sort of a bit of an unknown in the property. But once that sort of starts a thing, I think so we go to those city broad-based insights, and then within each city, so we're not going to go to probably Canberra or Tassie, depending on how we go for time. I do have some insights on those, but we're going to then, I was privileged enough to chat to spend sort of 15 to half an hour with some of the best property managers across the country, and they were able to give me. So but first off, we'll speak to some of the questions that I was sort of asking them to understand, and the purpose of those questions as well. So that's what we're going to do. So let's kick it off.
Let's bloody do it, mate.
Done.
Where are we taking this? Well, I think it's good to like what you're saying is we have a bit of a framework that we talk about. It's the FAB framework. It's pretty pretty much just looks at the fundamentals. So it's called the fundamentals, the analysis, the boots on the ground. So you need to look at the area as a whole, and that's exactly what we're looking at here. Which markets in Australia are affordable? So what we're looking at here is the dwelling price. How much is a property in Sydney? What is the household income? And then the ratio between your household income and the dwelling value. So you can see that Sydney, as expected, is the most expensive market right now. It has a $215,000 household income, but $1 million in dwelling price. Someone's just thrown in the comments that you can throw a dart at Perth. You can throw a dart wherever you want if you have a dart and a dartboard, preferably not on the bar wall though. So these are some things. These are just some quick little insights to have a look at. You can see that some of the least amount of household income there is Hobart with 185,000, but you can see the house price is 655,000. So that's a 3.5% ratio. What I found most interesting about this, and what I always find interesting, is the Perth market here has a household income higher than Sydney. So 225,000 for Sydney, for Perth, and $215,000 for Sydney. And the dwelling price in Perth is 560,000 and 2.5%. So Perth itself, looking at is a 2.5. It's the most affordable city overall, right? Adelaide 3.4. Brisbane still affordable at 3.4. Melbourne, I don't know, man. I think, what are your thoughts? I guess we'll talk to your thoughts on Melbourne soon, but I think Melbourne's a bit of a dark horse that's sitting in wait, ready to bolt out the gate. And then I'm going to plant my flag in the ground. 6 to 12 months, Melbourne's going to be where it's at, but very affordable.
I'm going to say closer to 12 to 18 months for me. And I think there's already that sort of, we've been talking about the grass. I'll talk about the things that are sort of the property managers who speak to investors day in, day out are telling us that are holding people back in some of those locations in Victoria. But Melbourne's an interesting one. And what's even more interesting is these numbers, because like there was an article a couple of weeks ago saying that Brisbane has overtaken Melbourne and so this is the ABS, whereas there's another one out there that just like that's one thing to be very wary, like trust in the data, yes, for sure. But just understand that if you're going to just have a look across a couple of sort of sources sometimes to verify. And that's why we're doing what we're doing tonight.
No, I mean,
we've looked at
that data, because that data that you're talking about there, where Brisbane is above Sydney, Brisbane is above the Melbourne price. That is including everything. Brisbane hasn't got as many units as Melbourne. So when they averaged it out, including all the affordable units that are inside of Melbourne, Brisbane does overtake. But in terms of house price and house value, Melbourne's still head and shoulders above. So yeah, it's hearing the headline and then digging into the data of that. And that's kind of why we want to go to people like Louis Christopher, for instance. So Louis Christopher runs SQM Research. He has dwelling price forecasts. If you go back, I tell you what's funny is when you hear the bank doing their bloody forecasts, it's so hard to get the right. You haven't got the last 3 years of their predictions because they're always wrong. Louis does these boom and busts, and then he has like segmentations. You can see he's got like forecast 2024, 12% to 15% for Perth. So he has like a bit of a range rather than saying it's going to boom or it's going to bust. He gives you a bit of a range there. So why do we care about rental forecast? Why do we care about it whatsoever? So rental price growth is actually a pretty good indicator for future capital growth as well, because as rental prices go up, those renters are like, gosh, I'm paying so much money in rent. Why don't I just become an owner? And when the property market is affordable and those rents are going up, they're like, heck, I'm just going to buy my $500,000, $600,000 property here and live in that, which then drives up that market. And we've got some data in here to show you that. But what it also does is attracts property investors as well. So let's just have a look over the last 12 months from November 2023 for the 12 months. We've got Perth, 18% growth. Brisbane, 12. Darwin
And this
3.9.
rent growth, just to
Rent growth.
if people
Sorry.
aren't reading up
Yep.
the
Yep.
top, if you're not watching the
Yep.
slide.
Yep. Yep. Rental growth. Sydney actually has gone up quite a lot, 16.8. Adelaide, 12.3. Hobart has gone backwards. Canberra has gone backwards. However, the top rental price growth states, top three, are Perth with a massive 12 to 15% growth, Brisbane, a massive 7 to 10% growth, and then the next one down is Darwin, 0% to 3%. So there is quite a standout
It's not
with Perth
in
and
order, Joe.
Brisbane.
You've got Sydney, Brisbane, and Perth.
Ah, oh well.
Yeah,
Yeah.
they've done it. I don't know what order they've done it in there. They've done it. Oh, there's no
I
rhyme
don't
to
know
their
the order
reason.
actually. Okay, cool. Sorry, I thought it was
Growth.
filtered by that, but you're right. Third is Sydney, and then Melbourne is fourth.
Close fourth.
Um,
Yeah.
yeah.
Interestingly
So
as well, Adelaide's still good. So that was a forecast for 2024, and I would say that, speaking to property managers on the ground over the last couple of days, I would say that Sydney is more than likely sort of looking to exceed that, even 7 to 10%. Perth, yes,
interesting.
definitely, you're sort of seeing that as well. Brisbane, yes, we're sort of in the affordable markets, and we'll talk to that sort of more segmented view. But 7 to 10% is probably on the money, so to speak. Melbourne as well, yes, there's definitely some propensity to rents are starting to increase in Melbourne, from what I'm sort of hearing, and Adelaide as well. So I'd say
Interesting.
there's some
And that's some of the things that like don't come up in the data. Like we don't see a lot of like it takes time for this data to come on through. So there is still opportunities for you to jump into a market when you do these more boots on the ground type of conversations with the property managers and say, hey, which one's growing, which is going. We'll talk to those type of questions that you need to ask further along in here. So as price moves, we start to see investors becoming attracted to markets with solid yield and solid growth. So what I'm starting to see is we were buying in the Perth market at 6% yields. That is probably now down to about a 5.5 to 5.4%. So the yield is starting to get compressed because we were buying at, let's say, $500,000 and the rent was $600 a week. So that was a 6.2% yield. Now, if you buy that same property, it's now $600,000 because the value has increased, but it's still $600 a week in rent, right? So that's a 5.2% yield. So what you'll start to see as some of these markets get more and more expensive, the yields will start to drop and they'll become less attractive. Now, for the Perth market, I don't feel that we're at that stage just yet. The data is not backing that up. The market is still growing incredibly strong. The supply is very tight. The demand is very tight. But just keep that in mind. As markets shift and change, other markets get more attractive. Which markets are getting more attractive for people, investors, and owner occupiers as well?
starts with an M. At least from my research, and no, and the conversations I was having were backing up a lot of this information around Perth. The thing I will say, and we'll get to a lot of this as well, it'll become very apparent, is you need to, the purpose of having a chat with the property managers is that they're seeing properties from across the city. They're not just seeing the one sort of number on a spreadsheet, which yes is good for investors to look at initially and consider. But then they'll say, okay, great. If you're looking at Eagleby and Logan versus somewhere like Kalanga up in the north of Brisbane, they'll manage properties in those areas, and they'll sort of say, okay, I've been increasing rents and you won't sort of, that data will only get reported in the SQ and boom and bust in probably sort of 6 or 12 months after. And by that stage, it maybe not too late, but you're just sort of chasing your tail, so to speak.
Yeah, I agree. Okay, cool. What are we talking to now? Is the key insights gained from property managers? Is that what we're hitting up, Jeff? What are we doing?
Well, so the key questions and what insights you're looking to gain. Should we, before we get into that, Joe, should we run our first ad?
Oh yeah, go on then. Treat ourselves. Treat everybody else. Let's do it. Ladies and gentlemen, we have a special announcement from the Master of Commercial Property Investing, Steve Polisi.
I love commercial property.
Get ready to have your minds blown as Steve is back and he's got some pretty exciting news for us. Steve is unleashing his second sensational book upon the world, and get this, for the AUS Property Investors members out there, he's giving it away absolutely free. Yep, 100% free. Yep, 100% free for all property enthusiasts who want to learn and grow on their commercial property investing journey. But he's also added a little extra chili to make this deal even spicier. With this free book, you'll also receive a complimentary 1-hour strategy session with the man himself. Imagine a full 60 minutes with Steve's commercial and property genius dedicated to helping you master the intricate dance of commercial property investing. And who better to dance with the man who looks better than Patrick Swayze in Dirty Dancing? Don't know about that. Want to grab this offer? It's super easy. If you're live right now, click the link in the comments and secure it today. If not, grab your device, open up the browser, head over to pleasyproperty.com, look for the book page and grab your free copy of Steve's latest masterpiece. And when you're checking out, make sure to use the exclusive code OZPROP to secure the free book and also your free 1-hour strategy session. My only concern with this offer is that Steve's going to have to turn it off soon, as he can only do so many sessions. So if you want to secure your spot, do so today. Oh, nearly passed out there.
Good times, good times. Great classic hits. So, but where will we be, Joe? We were talking about the key insights you're looking to gain from a property manager. So, first off, I'd like to start by saying what a property manager is or shouldn't be. And that number one is, if you're looking for a property manager to tell you which area to buy in, I think that's you're perhaps not looking to the right sort of expert. That is something where you need to have a thesis and understanding yourself. So you go into, let's imagine, so probably the first ever process, establish a budget. Once you do that, then you can then sort of say, okay, with my budget, where realistically can I buy that property? And then sort of that's the fundamentals and the analysis bit you're looking at. And then you sort of, as part of the analysis, you're then sort of looking to, okay, great, that's my next tick to sort of confirm some of the information of the boots on the ground, whether that be yourself, going to the location. So that's where the property manager will come in. So I'm going to assume that anybody watching this has done this prior.
We've already assessed the areas that we know and love. We want to buy in Brisbane, okay, and we've worked out our affordability is between $500,000 and $600,000, which then cuts us down to about 10 suburbs. I'm just throwing random numbers out here to paint the picture. And that's generally what we see, right? You're going to do analysis. You're going to break down those 10 suburbs and it's going to give you 7 suburbs left. And then what you need to do is become an area expert in those suburbs. You then have the choice, depending on where that area is. If it's local to you, I would then start to do the drive-bys and kind of rule out places that you're not so interested in first. But if it is like Perth, you want to do some, and you live in Sydney, you want to do all the computer research up front, and then work out, great, where am I actually interested in? Now I've got my hypothesis, then I'm going to rule it out. So that's exactly what you're going to be doing with your property managers. So what I like about doing this is that you literally just get up a Google map and get the property manager. Hey, Mr. Mrs. Property Manager, you buy a computer? Yeah, I'm buying a computer. Great. They get up their map and you get on that map together and say, great, point out all of the hot spots and all, like, start with the not spots, because everyone loves to dig up the dirt. What are some of your questions, Jeff? What are your kind of go-to kind of questions to ask a PM?
Yeah, definitely, and it's very similar to me. It's understanding, well, where shouldn't I be buying, and where's a rougher sort of crowd. Look, where do you have the most challenges with your property management? Where should I really be avoiding? Because that'll tell you that. But understand why they're sort of not suggesting those areas as well. If they just say, well, there's a reason it's probably most likely because the tenant's a bit rougher or the demographic, and they might not be too sort of chuffed about going there after night. It could be another reason, but it's all. And then once I've sort of established the area, I've assumed the conversations I was having were more around, I wanted to understand what was happening in the local market area, like what was happening with rents, what is happening with the prices you're sort of seeing. Usually property managers won't go too much into prices unless they're a really investment sort of focused property manager. All property managers do investments. I want to sort of know, how quickly are things renting? Like, do they need to do 7 open homes to get a quality tenant? I also want to know what the vacancy rates are as well. So the reason you want to know all this information, you can look it all up. But what will happen is they'll be able to tell you, okay, yes, the Perth vacancy rate, or the vacancy rate for Armidale, which is a big kind of region of Perth, or even Logan. Let's just pick on Logan for a little bit. Is is 2%. But within that, there's even markets within markets, because there's probably 80 suburbs across Logan. I don't know for sure, but there's a good deal of, I mean, it could be 50, whatever it is. They'll tell you, okay, what I'm seeing right now in Shayla Park, that properties will rent within 2 openings. Where if you go to Waterford West, and I'm just making up suburbs here, not making up, they do exist.
It's a real
It's
suburb.
taking me, yeah, it is a real suburb. It takes me sort of 6 or 7 opens. So it's really getting granular and sort of saying, what is the risk of the area? So you've already established. So if you've selected Eagleby as one of your suburbs, and they say it takes me 7 opens to list at the moment, and the quality of tenant is not fantastic, then you might just sort of say, okay, that's a data point. I need to keep that in mind and consider that. It's not the 100% rule it out, but you just sort of say, okay, well, that's something to take note of. Is that an area I want to be buying in? Yes or no? And what are the other sort of factors? The other thing that I look at is
always a balance of risk as well, right? Like,
yeah.
just because the place is the absolute cheapest purchase price wise, and you can still get a good rent, doesn't mean you necessarily want to buy there. But also, just because it's got a bad stigma, it's got a bit of reputation from the locals, is that a fair representation of value? Because if this area is $80,000 cheaper and this suburb here is $80,000 more expensive, but what we're starting to see is the demographic shift in this area, and we're starting to see, well, actually, there's a renovation there. I literally did that today. I went to an area that is a not spot because my computer research, blah 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 blah. This is a not spot. This is a no-go area. Having a chat with property managers, they're like, yeah, look, cross this whole thing out. And then I go there and I start to see it gentrifying. I start to see new developments going on. I start to see renovations happening, and it starts to become, okay, cool. Here's a road of opportunity, which is the difference between that $80,000 that can be yours if you're willing to take it on and take on that risk.
Yeah, exactly. And further to that, I asked this question just to see what they respond with. I don't necessarily say, okay, they said this area, I'm going to go buy in this area. As I said, your property manager's purpose isn't your investment advisor. But I just ask them, where are you seeing opportunities? Where are the investors sort of looking? And where are the owner occupiers looking? Because that'll sort of give some clues, and you can sort of say, okay, that's an interesting data point to look at, and say, okay, well, owner occupiers are buying there, and investors maybe aren't looking there so much. Maybe that's because you got to remember, owner occupiers typically will drive property prices. So you want to sort of see and understand. And if that ticks your boxes and it lines up, fantastic. If it doesn't, then if it's outside your budget, then unfortunately, you're not going to be buying there this time.
Yeah, 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 yeah.
What else? What else do we miss, Joe? What do you ask?
What are some other core questions? Another core question that I think is underrated is, you're talking about vacancy rates. The vacancy rates in this area are 0.8%. Cool.
Yep.
For what asset? Well, I had literally this was phone call conversation today. Sorry, a face-to-face meeting today. Is how much? What properties are we buying here? What properties are renting? Do not bother with 3-in-1s. Do not bother with a 3-in-1. Do you know how many double income? That's another question. What is the demographic? Have we got single incomes, or have we got double incomes? Joe, all double incomes. Double incomes, 2 kids. What does double income 2 kids means? 4-bed, 2-bath. That's what it means. It doesn't mean 3-bed, 1-bath. If it's a single income with 1 kid or 2 kids or 3 kids, there's going to be a ceiling of affordability of how much that person can afford in rent, but also how much this area can push the value up. So you can start to see those type of things as well. So that's another good one. What is the asset type? What are people attracted to? What do people want to see?
I accidentally discovered, I mean, wasn't really asking the question, but just thinking back to the conversation I discovered at least two instances of that in my conversations in locations. So, and it does hold true. Like you think if you've got sort of an area where there is a single income or there's a separation and that results in a single income, then that was the confirmation that there isn't the ability to keep rents increasing. So shall we dive into Brisbane, Joe? What are you thinking? Let's do it. Let's go into Brisbane.
Well, mate, let's go to whatever I've loaded in the bloody thing. Let me figure out.
We're going to do a lap of Australia here, people. What is the audience's thoughts on Brisbane at the moment? Like, are people interested in Brisbane?
Yeah, I'd like to hear people's opinion on any other questions that they ask property managers as well. So we're going to start talking to the core logic data and research. One thing that I just wanted to note here is, as you can see here, residential real estate in Australia is $10.4 trillion. Massive, 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 massive. There's 11 million dwellings in Australia, and we have an outstanding debt, a massive debt of $2.3 trillion, right? When you boil that down, that is a 19.8% LVR, right? Loan to value ratio. We have only $2.3 trillion worth of debt on a value of 10.4. So if we had $1 million property, that would mean we only have under $200,000 loan on that. So when people are like, property prices are unaffordable, yeah, some places are unaffordable, but generally the debt that we're holding on here is not outrageous. So that is a key point just to be wary of. So one thing that you will see as well, and I'm sure we'll be seeing these in the chart soon, is interest rates, when you have a large amount of debt, become a bit of a problem. When you have a small amount of debt, it's not such a big problem. So some places we see areas where it's grown quite a bit, but it's grown off the back of first home buyers that are going in 90, 80, 100% debts, rather than, that's when you get in trouble. But when you have, generational wealth trading a $3 million property for a $3.1 million property, they don't care. They're not getting hit. This is why we haven't seen massive foreclosures and massive problems in Australia from a debt perspective, is because the LVR of Australia is 19.8%. So I just wanted to overlay that. The other topic that I wanted to discuss is, and I know we're all sick of hearing about housing affordability, but it really is the government's problem. It's the government's fault. And we need to change the narrative around property investors. So I want to throw some numbers out to you guys. In 2008, there were 72,000 rental properties listed for rent. Okay, 72,000, 2008. The population moved from 24 million to 26 million. So 2.43 million more people in Australia. Guess how much, Jeff? This is not pre-planned. How many rental properties do you think are listed in Australia right now? It was previously 72,000 in 2008, and that was before we had 2.43 million people in here.
I think it's about 20. I'll just going to throw a round number out there, 20,000.
No, you're not far off though. So today it was 72,000. It is now 30,000. So we have gained 2.43 million people, and we've dropped the rental pool by 60%. Isn't that mental? There are 11 million properties in Australia, 11.1 as we just saw. The federal and state governments own 300,000 of those, right? 300,000. I don't know what that percentage is. Someone get your calculator and tell us what that percentage is. Guess what? Guess how many federal and state government owned properties there were in 1972?
Probably, let's say 900,000.
No, they own 300,000 now, and in 1972,
well, I don't know. I thought they would have sold them off though. That's what I was. I mean, maybe it was like let's say 200,000 then.
Okay. You're not pumping me up the way I want to be pumped up with these numbers, Jeff. You're going in the opposite directions. Anyway,
okay.
In 1972, the number was 300,000. So in 50 years, we have not gained the amount of government housing. So when the government talks about bringing on $1.2 million homes, 1.2 million properties onto the market, those are just words, right? That is, who are the people that are buying these properties? So 92% of rental properties are owned by private investors, and the government accounts for 8% of that total pool. These numbers are absolutely ridiculous. Like the only people.
Do you have a solution though, Joe? Because right now all I'm hearing is problems. If there's no solution, if there isn't a realistic solution, then I don't know. I'm not saying don't talk about it, but yeah, what are we doing about it then?
Well, we need to change policy to make it better for Australians to buy property. Investors should stop being vilified for being a property investor because they want to provide housing. The reason why this number has dropped is because APRA has made some changes in their rules in May 2015 to make it harder to buy for investors to get property, to become a property investors, which has started to dry up the pool. And over time, that pool has gotten drier and drier and drier, and now there is no properties available. So building more properties, yes, that's a way to go. But we need to have investors to be incentivized to start buying these properties. Like the Greens were talking about a rental cap. You know what, guys, we're going to rental cap this. Let's just play that out. What happens if the Greens cap rental prices at 66? Let's say we get $500 a week rent. We're capped at 500. Interest rates have been going up. Are our interest rates going to be capped? Are our expenses going to be capped? Investors are going to say, you know what? I'm not so interested with this whole thing. I'm going to get out of the market. And if 30% of the market are renters and we're bringing in hundreds of thousands, actually, you're winding me up now, Jeff. This was going to be on
talk about where we should buy, Joe. I didn't come to hear about. I mean, we're already let's.
Well, the Western Australian health minister went over to India to recruit 5,000 healthcare staff to fill the shortage across the entire state. So he's going over there to bring in healthcare workers. When I was in the UK last year, everyone was, because I'm like, hey, I'm Australian, you know, blah, blah, blah. And they're like, oh, mate, can you stop taking our NHS nurses? So these government jobs are really good to see in an economy. So there's a little bit of a tip and trick for you. If the government is spending hundreds of millions and billions of dollars on government jobs and updating hospitals, where are these hospitals? Where are these larger services going? Okay. Anyway,
I think you know what, Joe. We're going to have a podcast on housing affordability because you keep talking about it. So if you keep talking about something, you're going to just have a whole. You can get all here. Yeah, no, it's going to. I think it's going to happen. We should get somebody. If you think, yeah, maybe Cameron Murray. Let's get him one. I want to do it now. You've made me do it, Joe.
Wound you up.
So Brisbane.
Okay. So what are we talking about? Bris Vegas. We're going to talk about Brisney land. Okay, let's do that. Yeah. Well,
are we talking about
this is just
value changes.
Well, dwelling value changes. But let's go to Brisbane. Oh shit! I need to get my new tab up. Hold on. This is live, folks. Let me get Brisbane.
Credit community. Sorry. Do not understand.
Bit of a. Okay. There we go. Cool. Brisbane. There we go.
What are your thoughts and insights on Brisbane as a macro, and what is everybody's thoughts on that market? Are people sort of it was actually our favorite sort of property. I did a poll and that was the one that came out on top. So Brisbane by about 32. It came out 32%, I think it was. So that was I think the next was Perth at 16%.
Oh, really? Okay. Yeah. So in February, dwellings rose by just 1%, just over 1%, which is just over one. Sorry,
it's only 12% per year, Joe. So it's only going to double in 5 years or 7 or 6.
Exactly.
Years. How dare it only double every 6 years?
But over the past over the past 12 months, it's grown 15.2%. So back in 2022. It's gained quite a bit, so it's picked up a lot where it's left off, and it's gone really strong. So Brisbane is one of those markets to watch for sure. It's got a lot of potential there, not just based off of these charts. We can go into some of the others and what you're going to kind of talk about, but high level, those are the numbers that we're kind of looking at. Here is the quarter growth charts. As Australia as a whole, it grew 1.3%. Combined regionals, exactly the same, and combined capitals, 1.2. So you can start to see the areas over the last 3 months that have been growing. So Tasmania, down 0.1%. Regional Victoria, which is interesting, down 0.1%. Overall cities now, so it's then broken down into cities, and you can see the line chart of the overall combined. Hobart down, and then Melbourne down as well. Perth, a massive 5.2% in the last 3 months. So if you annualize that out, you times that by 4, you got over 20% growth annualized if it just went, directly at that. Not saying that it always does that. 3.6 for Adelaide. For me, Adelaide is starting to get quite difficult and unaffordable. So it's one of those markets where you've really got to. Previously, I was buying in 12 to 15 locations. That's now dropped down to a case-by-case basis for a deal in about 3 to 4 locations. So you just need to be very, very careful of those markets. Brisbane, 2.9%, Sydney, 0.6%. What insights have you got, mate?
Well, I would say my insights on Brisbane are you just it is a city that is has done quite well, and I feel with a lot of investor sentiment. Like, it's interesting, we don't talk too much. We talk data, which the data does look pretty good for Brisbane, and I think the only challenge I foresee with Brisbane, and not all of Brisbane, but just pockets, you just have to be a little bit careful, is the affordability if you're sort of buying for renters. And it's not to say that it won't still continue to grow, but you just have to be aware that you may not sort of see rents keep up with property prices expanding. So that's just a bit of a
What do you mean?
theme
What does that mean?
what I mean is, like, if a property rents, like in Logan, we'll pick on Logan again. So there's
Right.
a key
Okay.
area.
Hey,
So I
Logan.
spoke to Jackie, and one of the things she said
Okay.
is,
So who's
is
Jackie?
any
Jackie Skeen of My
Jack
Logan
Skeen,
Realty.
all the property managers, I'll put their details after I finish speaking about them. So Jackie said that anything sort of at that $600 per week sort of mark in Logan, even in the more affluent sort of parts, the sort of the Tanamiras and the Springwoods and the Shayla Parks, those sort of suburbs, anything of that sort of 600 or below, sort of between the 5 and the 600 mark for rent, is renting very well and renting to good quality tenants. Once you go beyond that sort of $600 per week rent, you then sort of start to see things sort of sit on the market for vacant for a little bit longer. But
Okay.
what she did also say is that rents were still continuing to go up by $15 to $50 per sort of rental. And remember, in Queensland, you can only increase the rent generally once every sort of 12 months. So you're sort of seeing that. Whereas remember when we had her on, she was saying she was getting sort of between $50 and $100. So rental increases
Right.
have started to slow down, at least in her area. And so what I mean
Interesting.
by that is, but still, because of what she did say on the sales side of things in Logan, is that there's still just a absolute lack of stock on that in that market, which is still
Yeah.
meaning that the prices are continuing to sort of grow, but you're not sort of seeing, like, if you pay $750 for a property, it's not then sort of renting now for, I mean, it may rent for it, but you shouldn't expect it'll rent for $700 a week. It's probably likely it'll still rent for that $600 a week. So because there's just a supply and demand, the fundamental law. So that's what's sort of happening on the ground in Logan.
Interesting.
The other thing that the other thing that she mentioned, let me just see, because I've wrote a whole bunch of notes on this. So
What
she
were the
did say
questions that
that,
you asked them? What were the fundamental questions that you started to ask? So you went in this
yeah,
with, I'm going to ask these 2 or 3 questions to every single property manager, and we're going to get consistent answers. What were those questions?
yeah. So I asked, what is happening in your local market with rents, rent prices, vacancy rates, how quickly sort of things are renting, what are the quality, what are the applicants sort of you're seeing, and I suppose, where do you see opportunity as well? And the opportunity one's probably the hardest one. But what she did say, though, was a lot of investors still buying in Logan, which is driving that. That they're doing it based on the potential of capital growth. Their expectation of rental increases is not quite there anymore, and that's because in Logan, the average sort of income per week is $2,300 per week, and that's that $600 sort of amount is right at that sort of 30% of that sort of income, which is where sort of rents have sort of started to hit a ceiling in that area. So
Super
what she was
interesting. Well, I
saying,
mean, that's kind of, so where's the rental growth going to come from? Because I mean, with our Louis Christopher data, right? He was saying that it's going to grow 7 to something percent. It was going to grow a
well,
lot more,
yeah. I would say what'll happen with those is, you've
7
got
to 10.
investors that are still renting their properties for $500 per week. That'll then
Yeah.
increase to $550 per week. So
Yeah.
in 2024, it'll still look good. And we're just talking
Yeah.
about particularly Logan. The other sort of insights that I did gain was from the north of Brisbane. And for this, I had a conversation with Nick DeRosa from Real. I think I should look this up. I'm not going to say it
Real,
before Real was a Housemark, not Real Mark.
House
So
mark. That's right.
he's from Housemark, and what he said, and Jackie confirmed this as well, is that vacancy rates in the north of Brisbane, and when we say, we're talking Deception Bay, Moreton Bay, all these kind of regions, and he sort of said there's a lot of demand in places such as Kalanga, Bracken Ridge, and Strathpine, and those sort of areas. I'm not saying you should buy in those areas, but I'm just saying that's where he's seeing investors sort of pick up properties. But what he said was that vacancy rates they're seeing still under 1%, which a couple of years ago he was saying was almost unheard of. That sort of 1% across a sort of certain area. So he was saying you can pick up 3x1s at that sort of. Got a mop on. It looks for a second. Joe might be in the laundry. Oh, gee. That's.
I thought it was a nice looking.
You've distracted my train of thought.
Get rid of it.
But yeah, so that's. Maybe I should get a. I feel like I need something. No,
solid
okay.
Comment.
Back to focus. So he was saying for 3x1s, you can still sort of pick those up in the probably not so much Kalanga now, but Deception Bay. You need to be a little bit careful with Deception Bay because we've done a deep dive on that a couple of years ago. Yes, it will change, but there is a side of the highway you want to sort of be looking generally in the right hand side of the highway. But yeah, if the price is right, so you're on the left. If you're driving towards where the bay is. Yeah. Right. Southern side. You want to, yeah, that's right. Yeah. Southern northern is easier rather than left and right, isn't it? Because if you're driving away, yeah, you're right. But no, so that's the inside. The interesting thing he said was they're seeing a lot of investors in Ipswich purchasing a particular suburb called Raceview, and I'll bring up a thing here, which is where you sort of it's not this. This is why your property manager is great to share the insights. You take it. So I will share this, and we're going to look at microburbs now. Is it big enough, Joe?
Oh, that is big enough. Now, Mike, actually, one thing to mention. This is an amazing boots, and it's out of date, yes, but it is an amazing tool overall to understand an area. So, as one of the things I thought we we're going to mention at the end is like tools and resources to use. This is one of them. It's super helpful, super useful platform to identify. Like the main thing to look for is this affluence score, and it gives you a score out of 10 about where are the hot spots and where are the not spots. Now, this is just data. Again, you need to confirm yourself and get boots on the ground. So I did that. I just did a live video before on the talking about this session, and I went to the area that Microburb said, Joe, this is not a good area. And there was a burnt out house with boards all over it. So not saying it's 100% accurate, but it's a good indication to kind of guide some of your own on the ground research. So sorry, mate, go on.
No. It's good. I like when you have those little value nuggets, and you should listen to a lot of those things that Joe says. But the thing because I've heard Raceview, and it's right next door to Ripley as well. So Ripley, I believe, is just, let me see. If we talk to this, if I click on it,
it doesn't show you the names.
Yeah, I think it shows me eventually. But Ripley's probably Redbank Plains,
down the south,
somewhere around here.
South of Ipswich.
Yeah, somewhere around. Yeah, but anyway, so what the thing that interested me and it sort of is confirmed. Like, look at that renter percentage compared to, and this is comparing to Brisbane, which is not 100% meaningful because Brisbane is a huge kind of area, but it sort of says 46%. Yeah, statistical. Yeah. So, and if you look in here, there's pockets of Raceview that have got 73%, and then you've got even 78%. So it's just being mindful that if you are, and yes, there are some over here that are 37%, and there are some over here that are 19%. So you just have to be, and it's not to say these areas may give you great rental returns, but is an owner occupier, that's when you need to sort of actually, I would personally want to, if I was going to buy investment property, I would go to these areas and sort of see what type of people, what is going on in this area? Why are so many renters living in this particular pocket of Raceview versus this over here? Like, are there more amenities over here? Are the better schools sort of in this area? Is it closer to, what is the reason driving this sort of pocket here of renters? And even sort of up here in Ipswich as well.
If you zoom in, so that brown section there, if you zoom super far in on that brown section, you'll see a lot of units and like duplexes, and keep going to the other side, that even darker color. You'll see a lot of units and stuff like that. So what that does, as soon as you see a block of units, so it's all, maybe not. Maybe it's just horrendously Okay. Well, there you go. I'm wrong on that point. There's no units at all. Okay. That means
No, but
that's even
that,
worse.
that's an
Like that's
example though.
even
They've subdivided
yeah.
this into three, so that would have originally been one property there, and they've just split it up.
Yeah.
And even
But
here as
if
well, so
it's
they've
if it's got
subdivided there.
if it's got a lot of if it's defense housing pockets. Okay. Yeah. Okay. There you go. Thank you, Dan. On YouTube.
And the man
Defense
should get him
housing.
on a
That
live.
makes perfect sense. Um,
Mm.
But then does that correlate to capital growth as well? Do you want to be in that? However, defense housing people are not necessarily the worst neighbors either. So, you've got to factor all of these data points. But
Got me
good
looking now.
insights. Boots on the ground,
All right,
baby. That's what it's all about.
there we go.
Okay, cool.
So
What are your
that's
other
pretty much
insights?
what I gathered from. So my insights is that they're still from Brisbane, from chatting to property managers, and again, this is anecdotal. You need to absolutely confirm this yourself. Is that
Yeah.
there is still extremely sort of low stock on market generally across the suburbs and so a lot of these property managers will also have sort of sales departments as well. So they'll have some sort of insights as to what is going on. So there's not necessarily a lot of stock in these areas, which is then supply and demand driving those sort of prices. And people are moving interstate from New South Wales, Victoria. There is still the buzz of the Olympic Games, which I just think is amazing. But 9 years out from a big spectacle, 8 years now. But what is the
Well,
impact of
yeah,
the
I
Olympic
just
Games being
saw I
scrapped?
just saw a comment come up. What is the impact of the Olympic Games being scrapped? Just saw in the news. Whoa, the Olympic Games are going to be scrapped. No, they're not going to be scrapped. The government just announced that that's nonsense. I think they're changing the location. They're not going to demolish a cricket ground or something like that. The Olympic Games are still going on. So
Oh,
they're going to be
it just says
absolutely fine.
denies plans. Yeah, yeah. Jeez. Okay, well,
Yeah,
I mean, if that would have
scared you there,
happened,
mate.
I mean, they've committed. I thought we were about to break some big news. I was like, geez, that's huge because
Yeah.
they've committed billions and hundreds of billions, probably of dollars to building infrastructure. Yeah, there you
Well,
go. But no,
that's the key that's the key takeaway from these Olympics. It's not because of the Olympics, right? It's just because the government's putting billions of dollars to make their cities, and they're always delayed. Governments are always delayed. We are bringing in millions and millions of people, and we need to increase our infrastructure. We need to build all these things, and governments are just a bit delayed in doing that. So it's a good excuse for Brisbane to say, you know what, we are on the world stage, and we are going to invest heavily into that. And what is that going to do? One, it's going to create more jobs. It's going to give people a job for the next 9 years as they build that out, as they keep growing and growing and growing. And those people are going to make money and prices around there. Why do property prices grow up? Because people create value and they want to store that value somewhere. So they store it in land. Land is what grows in value. So if we can create more jobs, more value, that's why Sydney is $1 million, because this is where there's a lot of economic activity, a lot of money is going in. This is where all the
not all of
smart
land.
cookies are growing rapidly.
Yeah.
Yeah, so it's
There's so much more to Brisbane that I could have spoken to as well. Like there's the
oh,
beaches sort of out Manly Way. There's even the Gold Coast. Like Gold Coast apparently
yeah.
as well is still relative, sort of starting to see some more sort of rent growth and that sort of thing as well. So things are
I realize
things are heating up.
we're 50 minutes in, mate, so we need to get a bit
I'm
of a
through.
wriggle on. So this is one of my favorite charts that exists on the CoreLogic house value index. So these charts that we're showing you here, everyone gets access to them. They're released monthly. They're absolutely free. You get access to these. But this is not so much about rental prices, but it is about property prices. So you can see here which properties are going to, which percentile. So it's market segmentation. So we can see in Sydney, we have the market. So let's say Melbourne. You have the 75th percentile, which is the highest 25% of value. And then you have that is leading the decline, if that makes sense. And then 50% is 0.4, and then 25% of the lowest. So in Brisbane, you can see that the lowest 25% is starting to drive the market. The most affordable markets are the ones that are pushing the highest growth. So whenever someone says to you, you've got to buy blue chip, it's going to be the highest and best value. Typically what we see, and let's have a look at this chart here. Maybe not. No, we can't. I haven't got it. But what we see is there's a lot more variance. So the Sydney market will boom, but it'll also bust a lot more. So you'll see a lot more variance in the prices, and they'll go up and down a lot more. Whereas more affordable markets are a little bit more stable. So it's not like it's more like whoa, little waves. But don't get me wrong, they're
I think I'd
still
quantify that
bust.
by saying the premium parts of Sydney. You're talking your Mossmans, your Double Bays,
Yeah.
those sort of. Whereas I think the mortgage belt, mortgage belts in like Western Sydney, typically doesn't necessarily see as much of that. I mean,
But
it
but
can
this
still go
is
back and forth.
This is so interesting because you can see in Perth. I would love to have seen the. I would love to see this chart. Like you just got to get a collection of these charts. But what you would have seen is the affordable market, the 25th percentile in Perth would have. It's 6.5%. That's unreal. In the past 3 months, the 25th lowest percent affordable pockets have grown 6%, right? So 6.4% times by 4 is 25% growth if you annualize that out. That is unreal. But what we're starting to see is these prices are now getting pushed up to the more expensive markets. Under $700,000, we're not seeing that happen in Perth. So 700,000 and under, but they're starting to get there. Adelaide itself, again, the most affordable pockets growing. Darwin, again, the same. Affordability is the most important thing for everyone right now, and that's kind of coming through. Yeah.
So what I've done for Brisbane is I've put the people I've mentioned. If you want to, we don't get anything for that. It's just the people that gave me half an hour of their time. Well, let's quickly smash through Sydney's King. I do love Sydney, but we're going to have to do a quick. I'm going to do this in 5 minutes, Joe. What do we
Oof,
think about
oh
Sydney?
man.
We're going to do it,
Let
and then we're
me.
going to go to Melbourne.
Yeah.
I think we're going to focus on Brisbane. We'll focus a little bit on Melbourne and a little bit on Perth, or a lot on Perth
Okay.
actually. But Sydney.
Go.
What do you think about Sydney, Joe? What are your thoughts? We may have a
Uh,
dog in that fight.
so looking at our little chart here, I think that there's not much going on in Perth, right? For the last 3 months, Sydney. We're talking about Sydney. Not much has happened in Sydney in the last 3 months. The affordable market, the most expensive market hasn't moved. Barely has the other markets. It has come off. Where is our Sydney market? It had a pretty big boom then 2022 came, and it started to have a bit of a correction after 2023 as well. So for me, Sydney is not doing too much. It's a very expensive area. It's not within that affordability. So it has grown 10% over the past 12 years, which is amazing, but 0.6% quarterly in the past year. So for me, I mean, I can't generalize. There are different suburbs within Sydney and all of that stuff. So for me, it's steady as she goes for Sydney. Nothing that's going to go absolutely nuts, and nothing that's going to crash. But also, the other thing to factor is if you have $1 million property and it grows 2%, that's better than your $500,000 property growing.
That's 20,000, Joe. 20,000, man.
It's better than your,
that's like
growing 0. Yeah.
yeah.
So those are my views on Sydney. How did it go though? Because you've done more in depth, boots on the ground type of property manager conversations. How did that go?
Yeah, so very brief. So I chatted to Melissa Morgan from Progressive Property. So I'll pop this in the thing. And what she said, and she focuses on the eastern suburbs, lower North Shore, inner west. What she said very succinctly was immigration. Like, whilst yes, capital growth is not sort of absolutely booming in Sydney, she's saying rents. I think there was one example which said a rent it was in Concord, and it increased sort of $150, $200. And I said, okay, was that significant under rent? She's like, no, that's just that there's not a whole bunch of rentals. Vacancy rates are quite low. And of course, there is always exceptions to that. She wouldn't typically manage in the larger sort of complex sort of based areas. But what she was saying was immigration is driving rent increases. So professionals, not your typical backpackers, that she was saying in the sort of highly desirable, easy
10%.
access to.
Right.
Yeah,
Unreal. 10% in the past 12 months.
Yeah, rents are absolutely so, and what that sort of then says is once, particularly in the unit market, I'm not saying whilst we sort of talk about mostly sort of freestanding dwellings, to pick up a freestanding dwelling in Sydney, even the outer reaches, you're looking at $1 million generally. Like if you're buying maybe in the pockets of Mount Druitt, you can pick up for sort of 600-700K. But if you're looking to buy a house in sort of Sydney, you're probably going to need $1 million plus. But units, the yields on them are starting to really sort of creep up to sort of that's 4.5%. And then it just comes down to, well, if you're going to invest in Sydney, which I'm not saying you shouldn't, I'm not saying you should, up to you. You decide whether if you feel capital growth will come from those units and that particular pocket. But those are her very quick insights. Rents are increasing, which capital growth may sort of, she's starting to see some sort of green shoots of capital growth in there as she looks at. Now, I also had a chat to Nick from Coronis and Coronis Property, and what he said was interesting.
Coronis Property where?
Coronis Property yeah. So no, it's not Nick Coronis. It's Nick Giles. So he's Coronis. So Southwest Sydney. So that's I'll drop a link to his
bloody legend, Nick Giles. Nick, thank you very much for all your input into the group. If anyone has any property management questions, Nick is the first one on there. Absolutely.
Make sure you put the state as well. He loves when people don't put the state. But he was saying vacancy rates in the Liverpool region, which is a huge area of Southwest Sydney, were as low as in pockets were as low as 0.8%. And got as high as 4.8% within sort of pockets. And where he's saying it was most is
vacancy
sort of
rates are 4.8%.
Yeah, and it's where I don't know if you've been out to Liverpool, but they built a lot of sort of very, very large apartment complexes in the center of Liverpool. And I would imagine that's where you're sort of seeing that sort of higher vacancy rates.
5% is unreal. Like a stable market is 2 to 3%. 5% is off the charts.
So you just have to be, particularly in that sort of what he was saying as well. Rents have absolutely shot up and this is just I'm cherry picking data in the suburbs. He said Edmondson Park rents have gone up by 36.2%. He was saying, and this is just on the properties he manages, I imagine. But yeah, so I'm not to say you should buy in Edmondson Park because it's quite expensive there. The other thing he said from a capital growth perspective is that an asking prices is not necessarily sort of selling prices. So be cautious and look beyond asking prices. But he said 8% in the 21770, which is a huge region. So it's a Southwest Sydney, Liverpool region. So
what do you mean by what? It's more expensive or less expensive?
Yeah, it's becoming more
for $1 million?
Asking prices. So I mean, he didn't give me this, and I did this via text with him. So he didn't. So reach out to him despite asking prices. So what he did say was units are not, which unsurprisingly, because they built a whole bunch of units. So this is a free bed house category he's talking about here. So as you say, the assets. So you have to understand the assets that you're looking at within a particular market. So
yeah, exactly. And that's why like this core data here that we're talking about is talking about Canberra, it's talking about Darwin, it's talking about Perth. What you do want to see is a trend in the right direction, right, of the area. But there are suburbs in Melbourne that haven't grown 10%. There are suburbs in Melbourne that have dropped 5%. And then there are suburbs that have grown 25%, 30%.
You love me a bit of
so
Penrith.
a little bit of Penrith, which is not in Melbourne, but it's close.
I just wanted to put that out. But no, agreed. So that's my wrap of Sydney. Rents are increasing as a sort of Louis Christopher data has suggested. And in pockets there, if you're picking the asset, if you've actually got the time and the effort and inclination to do so, and the budget, because that's important as well, Sydney may be an option for you. So I'll drop Mel and Nick's
feeling it's a bit of a dark horse.
Well, I mean, depends on your budget as well. Like, I mean, if you got 500,000, I probably would be very wary of buying in Sydney, because you're probably then going to buy. You may see rent growth, but you just have to be mindful of the supply in that area that you're buying. So, should we kick on to Melbourne?
Yeah, going back to this chart that I was talking about that has the market segmentation, wherever the heck it went. This is important to understand. Like, I think this chart is so valuable because it allows you to work out what your budget is. Like, you overlay your budget because you're a property investor, you're a borderless investor. If you want to find the best location, like the goal of an investor is to buy the best property in the best location at the best price, which is obviously, that's very obvious, but it's for the buyer brief. What is your independent buyer brief? Because what I need as an investor is completely different to what you need, Jeff. What you need, Jeff, is completely different. So that buyer brief is going to change the locations that I need. But having something like this allows you to kind of see, okay, well, what markets are moving themselves, but what prices is the bottom 25% percentile. So for Sydney, the bottom 25% percentile is probably units. And you're like, no, actually, it's not growing that much. So I probably shouldn't be buying that type of asset there. But then you can see, well, maybe the Perth, the Adelaide market bottom 25 percentile is 500,000 or 550 or whatever that is. And then working out the markets that are suitable for your budget. Where are we going? Melbourne?
Brisbane. Melbourne. Sorry, we've done Brisbane.
Oh, okay.
Let's go to Melbourne. So what are your thoughts?
What are my thoughts on Melbourne? National sales for Melbourne? No, we're going to talk about rental properties in Melbourne. Where are they? 10%. So this is one of the things that, again, Jeff is going to probably go to in the data, but the areas that I'm looking very keenly, keeping my eye on Melbourne, it is soon to overtake Sydney as the most populous state. It's so damn affordable. There are so many damn affordable pockets in Melbourne. Yes, the rental yields are at 4%. Yes, they're not that great. Yes, the government policy is, pooping all over investors. Yes,
2033.
Land tax. Have I already had a rant about that land tax thing? I got my land tax bill. It was $1,000. Do you know how much my insurance is in Victoria? $1,200.
Wow.
Okay,
there you go.
So that's okay. But you go to Northern Queensland, for instance, insurance is $3,000. So yes, Victoria has a land tax that added a $1,500. It sucks. It hurts. I'm not happy about it. But there are taxes in every single state for the area that there is. So everything is different. So in Northern Queensland, they don't have a land tax. Well, they do. They have a land tax, but they don't have this unfortunate tax. They have insurance that's really expensive. They have a council tax that is more expensive. I'll swap land tax bill with you. Yeah. It's a very cheap property. It's a very cheap
property portfolio too then? I mean, I don't know. Maybe you don't want to do that. You want to find out more about where their holdings are.
I want to find out more. But no, I see there being a lot of opportunity. Now, let me just go back to the data because that's what who cares about my bloody opinion. So this is rental price growth at 10%. I don't think we're there yet. For Melbourne, we have vendor discounting at 3%. It was 12 months ago at 4%. It's now dropped down to, it's really hard to see this, 3.7%. So vendor discounting is increasing. What else are we looking at here, Jeff? The Melbourne numbers. Melbourne.
I haven't seen this pack before. So yeah, let's go back to Melbourne numbers.
Okay,
so
cool.
I specific. You go, sorry.
Go on, mate.
I specifically did choose the regional, and some people might not consider regional, but I do. It is of Geelong, and the reason I didn't sort of go to Metro Melbourne was because that is a huge area, and I wanted to sort of pick something a little bit different. I know I suppose Sydney and Brisbane specifically, but Geelong I just know somebody there, so it was a little bit easier than me to then get to know somebody that I already had the rapport and had the trust with. So I chatted to Sophie and some of these questions.
That's where the opportunities lie, right? Like that is where the opportunities lie. You can see Melbourne has dropped 0.1, 0.4, 0.8. The whole market is tanking over there. How do you guys rate the Victoria Regional? Some value there.
The only one I can really speak to is Geelong. I can't really comment too much on Traralgon or Shepparton or Warrnambool, or I mean, if you want to, or even Bendigo or sort of those sort of areas, or even sort of up in Wangaratta. Relative.
Yeah, regional Victoria dropped 0.8%. So that is definitely a consideration. For me, I see Victoria being massively undervalued right now. If I had property already in like New South Wales, I'm maxed out everywhere else, and I need to buy in at the bottom. I think for me, my personal opinion, you do what you want. Melbourne's at the absolute bottom right now. Now, we don't want to buy in at the absolute bottom because we want to start to see some green shoots going, because the goal as a property investor is to buy the best property at the best location at the best price for your buyer brief. And if you can buy a property right now, do not wait 6 to 12 months for Melbourne to kick off. Why don't you buy in a market that's still moving and going up, like the Perth market or the Brisbane market, like we've been discussing on here? Maybe find your good pocket of the Adelaide market, and then, okay, great, we're at that 12-month mark. Let's start reassessing our finances. We've made some equity on here. Let's shift that equity into a different market like the Melbourne market. So, yeah, for me, buy when you can buy.
The key thing I would sort of say about that, and nobody knows the answer to this, is that there's value in it maybe sort of at the bottom now. Is when does it sort of start to kick off? And speaking to Sophie, and Sophie's like, she's absolutely kicking goals in what she's doing, and just
Sophie
a great
Anna
sort of
REG Group.
Yeah, so, and some big moves coming up with Sophie as well, which will all be revealed. But what she did say about Geelong, she said and the theme I was got across the country was affordability at the moment, at least for rentals, absolutely wins. It's not to say that you can't sort of then go and buy a property, a higher valued property. It just means that your rents aren't necessarily going to be, your yield is still going to not be fantastic potentially, and it's not fantastic anyway. What she did say was more of affordable rental properties renting for $450 per week in areas such as Corio and Elaine. And Joe, when we've done a few sessions on that, and yes, the demographic you may have a bit more of a risk there. I've got a bit of a nugget as well if you have a slight more budget, so you can pick up something in those sort of areas that probably not low fours now. It has moved a touch, that sort of bottom end. It's sort of now looking about the mid fours. Corio and Norlane, like it's actually sort of moved up a little bit again, I feel, because last year I think you could get something at that low fours mark. Whereas now I think
it's super interesting. These prices 12, 24 months ago, like I was chatting with someone that was looking to buy property in 2021, and they were looking at 550. These assets are now 450. Like they've already gone to 400. They're already been $100,000 more. What's the likelihood of them going back? Pretty bloody easy. Sorry, I'm getting wound up. You're winding me up, Jeff. But
that's
okay,
right.
so
The thing that's
rent.
And so the investors are starting to come back. There's a trickle of investors coming back there. This is purely my conversation. What she did say is stopping people though, and it's no surprise, government policies. And the thing that the really big sort of kicker that people are concerned about is that land tax sort of additional 10-year thing won't stop in 2033, which is sort of people are factoring that in. They're saying, well, what if it doesn't stop? My sort of yields don't really stack. The other thing, and we did a live session on this about 2.5 months ago, is those granny flats in Victoria. And I'd asked about how that was going. Like, are you getting a lot of investors take that up? And she said, unfortunately not. It just hasn't sort of quite had the intended effect. And the reason is to build a proper and decent granny flat, she's saying 170 is the cost. That's what you're going to need to sort of outlay. And they're only renting for 290 to 310 per week. And it just doesn't make it. Yeah. So it's just,
it's the same as me, right? You're talking about Corio and Norlane. I own a property in Norlane. We've talked about it heaps. But I have it. I can subdivide this lot. It's a house at the front, and I can subdivide and split it off the back. I'm not putting a dwelling on the back of this thing. I'm not subdividing. I'm not spending the money because the land values are so cheap. I'm going to put $350,000 into the back house, or 300,000, and it's not going to be worth much more than what I paid for it. So it's utilizing utilizing my capital in the wrong way. You should be investing in a different location. It just doesn't stack.
You hit on You hit on a really good point there, though, the subdividable sort of block. She said that is, and I probably shouldn't be saying this on a live. There's some things I'm saying now. I'm like, oh, do I really mention that? Because it's the subdivision, because you can. I didn't verify what the land sale prices would be. You may have already done the show. Are they sort of selling for 100 or 150K, like the smaller blocks in Norlane? What are they, or Corio? What are they selling for?
No, I haven't redone it, to be honest. But it's cheap as chips. Yeah. Why do you say that?
Well, because I was thinking about the numbers in my head, and I sort of thought if I were able to pick up a place for 410 or 420, and you're able to sell a block of land that will rent for sort of, she's saying you'll get rent for 420, 430, and then you've then sort of got a property. You sell a block of land, say you sell it for 120,000. you're knocking. You then got a property that you bought for sort of effectively about sort of 300. That's then, and you will have to drop the rent a little bit. I'm not saying it'll still rent for 420, 430. You'll probably rent for 380, 390. So then sort of, but then does that work for you though? Does that work for your strategy and your plan? I'm not saying do that, but then your ability to get into a very sort of large regional asset. Anyway, I'll get on to the other things she mentioned. So she did
Great
say
point.
vacancy, yeah, vacancy rates are still very tight. Across Geelong, she said they're under or around that sort of 1%. Affordability is a sensitivity thing though. Once you sort of go above that sort of at the sort of more expensive rents, there's a little bit more vacancy. She did say
What's
if you've got a bit,
expensive? What do you mean?
well, anything above that sort of 450 mark, like unless you're
Jesus.
like she was saying she was per week. She was saying last night she had somebody wanting to find a property for rents for 450 in Geelong West, and she said that hasn't been like that for probably 4, 5, 6 years. She was saying. So
Yeah, tell me
there are a
again.
lot of people. There is a lot of demand at that sort of lower price point for rent. She did say if you have sort of that 5 to 600K, if you're willing to invest that sort of amount, the areas she saw some potential were, and again, do your own research on these, but Thompson, Newcomb, over towards that sort of thing as well. Saying at 500,000, there is some value in those properties. Yield's not going to be fantastic again, but that's what she did see. That was the wrap from Geelong.
Bloody good old Geelong, mate.
Hmm.
Here we go. There's actually a really good question. What about the greenfield sites, Charmont and AC? Yes, there is developable land, but no one is building there right now either. Great point,
Yeah.
Dan.
Last time, because we had Sophie, she did talk about that. So maybe we should drop the link to our she did, because we asked about that. We said, well, what's going on out that way? Like, are people buying? And she confirmed. She said, well, yeah, you just have to be mindful. Like, you're buying too far to the city fringes, you might there might be sort of properties built. So you just need
Well,
to
yeah.
be.
And I guess the comment there is, yes, it's developable land, but no one's building right now. So it's like a quick win right now, but it depends on what the strategy is, right? Like that's a high risk, high reward move if you're looking to flip it. So is there going to be growth if you say, hey, look, there's 100 people want to live in this area. There is going to be a 500 dwellings built, but none of them built right now. And I can buy it, and in 12 months' time, it's going to get tighter pressure. More people want to live there. The houses aren't built, and then I can flip it. But once that all of those houses come online, then it's a little bit challenging because you've got 500 dwellings and yours is exactly the same as all of the others. So,
And in
hey,
3 years' time, when they're still, if they may be still selling for the same price, why is somebody paying more for your property that's now 2 or 3 years old? Sophie's actually watching as well, so if she has any comments, like feel free to answer that question, Sophie, if you can. Don't feel like you have to, but yeah. So okay, summary. Should we go across to Adelaide, Joe? You happy to
mate,
go
we're
to
going to
Adelaide now?
South Australia. Let's
South
go to
Australia?
South Australia, mate. Let's see the 12-month change of Adelaide. Adelaide has been on a bit of a tear as well.
Adelaide?
11.8 Adelaide, 11.8% growth
Got the
in the
strobe
last
light
3
going,
months.
Joe. Look at
That's
you.
3 point. Am I sharing my screen? Yeah.
No, I just said you had the strobe light. There's a bit of flicker in your background. What I was going to say as well, are you still the mayor of Adelaide, Joe?
Am I still the mayor of Adelaide? I do have a number of properties in Adelaide,
I used to have
but
bought a few.
I'm not the mayor of Adelaide. I think we were buying a lot of properties in Adelaide. This is the problem with these bloody charts. Like this is not a representation of the value that we that we got. So we were buying around Feb 2021, but we didn't see this massive boom and bust. We had a client he bought for 435,000. Part of his strategy was to eventually sell and flip to then put that money into commercial, and that's great. That's your strategy. That's his strategy. We see that all the time. People want to create a foundational portfolio. Then they get a commercial asset or a cash cow asset like a granny flat or a subdivision. And then what happens is they start to run out of borrowing capacity. So they turn around and then they start to sell or add value. They do their renovations, they do the subdivisions, they do the developments to take that cash and put it into their cash cow. And their cash cow is the thing that feeds them into the future. So this guy bought it for 400. He didn't buy it. I bought it for him. $435,000, 2.6 years ago, maybe. I don't know what the numbers are. And he next door sold for $610,000. So he's taking his capital and running with it. I'm not saying that is the best way to go. I just don't. Yeah, as I said, we were buying in 15 locations. We're now buying in 3 or 4, depending on the value. if we can do some subdivisions, if we can do developments. So yeah, that's why looking at these numbers high level is valuable. It gives you an insight. But that's something just to kind of
What do you
mention.
what do you sort of what are your yeah, there will be definitely a live stream on our YouTube, Lizzie. We'll definitely that'll pop up and you will see it. What are your thoughts on Adelaide, Joe? Do you think it's and I'll share some insights that I gained.
It's had an incredible run. It's had an absolutely incredible run. The prices are starting to get really unaffordable. And like not super unaffordable, don't get me wrong. Like it's still affordable, but we are starting to hit those numbers for the value that is there, for the amount of money that's being spent, for the amount of government infrastructure and stuff like that. So I think that we're going to be all right for the next 6 to 12 months, and then it's just not going to boom, and it's not going to continue that wild trajectory that we're currently on. So we're on the gravy train. We've been on the gravy train for a long time. But when you buy an asset for $435,000 and then 2 years later it's worth $610,000, that's a lot of value that can't keep up going on forever, especially if it's not supported by other things. Like when we talk about WA's health minister bringing in 5,000 people from India that have support jobs for the whatever it was, the hospice. It's not health services. Sorry, I don't know why that was a struggle. That's driving more value. That's driving more value, more income. But I'm not seeing that influx. Like we're talking about the fundamentals, that's not as much there. So great value if you can get a good deal, but just be wary of buying a basic buy and hold, set and forget type of property that hasn't got any value add, that's at the height of the market. So that's my views. Probably a little controversial, maybe.
I don't think it's all that controversial. I mean, I could a spicy take is maybe it continues.
Database, baby. Database. That's all I do my thing off.
What are
What are your
everybody's thoughts
insights?
on? So my insights are yes, it's similar to a lot of cities. Like rents have increased, and there's no secrets really. That was a comment across most of Australia that I did get. The one that I didn't see rent increases was Tassie, which, funnily enough, the data reflected that. So I think it's really good to be able to do that. But so Prue Muirhead from Muirhead Property Management. So she was able to give me the insights of. So the quality of tenants, she has saying, had decreased and they focus mostly sort of 15 minutes, sort of north and south of the city, mostly. So she said they do rent easily. What she was saying is the top end of the market has slowed. So I mean, no surprises. And what she did say, reasonable property, they used to sort of have, or they're now sort of still having 60 to 80 inquiries for under $400. Once you sort of get to that 550. She broke it down, like just amazing. She would have to break this down. So $600, they sort of had 30 inquiries, and once you sort of get up to the $800 a week, they only had sort of 5 to 10 inquiries. So what she also So I mean, it sounds like there's also a cap in. I imagine those sort of $800 are probably over in Glenelg and even sort of maybe even sort of inner east of Adelaide, inner west, that sort of way. Sort of really sort of 5-10 minutes from the CBD, those sort of more affluent parts of Adelaide. What she did say about renting, she sort of said people they want to, and this is not unique to Adelaide, but she said the city or the sea. So some sort of favourite pockets are you sort of Hallett Cove, Christie's Beach, Port Noarlunga. All these places have done really well from capital growth. So. She did say, and just I think you need to be careful on the purchase price. She said the capital growth she's expecting immigration and shortfall of properties. So supply and demand again. She's saying supply and demand is likely to still still sort of be in balance towards the demand side for a little bit longer. And she's still saying there is a little bit of growth to come. So how much that looks like, and you sort of saw that in the data, but I feel it's towards the back end. And if you're going to buy, there's probably some value in those affordable pockets of Adelaide, so northern suburbs. Just have to be a little bit careful. Like they have seen good growth already, so you just want to make sure you've got some value add potential if capital growth is important for your strategy. That's what I see.
Yeah. And also subdivision, right? Like if you can get a good subdividable property that you can retain and build, very tough because we've talked about it before. The South Australian rules are very tough on how you subdivide. But if you can do a build and retain, which not many people look out for because it's so tough, the rules, that they just don't exist. But when you find them, you're like, oh wow, actually I can buy this at a good price and do it. We just you just got to keep an eye out on there. Then you've got some value. But
they kind of know. They kind of know. And a lot of vendors are a bit savvier. They sort of know that you can do it, and it attracts a lot of interest. The one thing that is a big change, and I messaged you about this other night. You didn't respond to me about it, which I was a little bit disappointed. I was excited. I was like, they have opened up. You can, as far as I know, and I have confirmed this with several property managers, you can separately rent granny flats in South Australia now.
Ooh,
and it's been that way since December. So yeah,
but the rules, it hasn't been that since that way December. They had very unclear guidelines and rules that they placed on there, and everyone asked these questions. They're like, yeah, we're not going to tell you. We're just going to let you. Yeah, so it's been confirmed.
Similar to Victoria.
Very interesting.
So make sure you're checking with council, because it could be council dependent rather than SA government dependent. But I see that potentially as an opportunity to increase yield, because as prices have grown, rents may not have kept up. So, but yeah, you again have to build the granny flat as well. Maybe.
Yeah, but I mean, there are so many properties actually like that you don't realize in South Australia that have granny flats. So it's one of those markets. Logan's a big market for granny flats. Perth, South Australia itself has some granny flats as well. So you can get a good deal. The challenge that I see is that they're made for they're made for what they're intended. They're made for granny, so they're kind of connected to the house and they're not really separated in a way. But if you can build a fence around it, make it look pretty, and do all that kind of stuff, then you can buy a really good asset. You can. There we go. It's confirmed by Facebook user, so that's good.
That's actually he's an authority. So Jack is a town planner. So sorry, he's a valuer. So, but he would have connections into. He would definitely have his finger on that pulse. So Joe, before we go to the I suppose the bride of the Australian property market at the moment, Perth. Should we run to our second sponsor, and then we'll get to Perth, and then sort of give some closing remarks and have a little bit of time for Q&A?
Do it.
There's nothing worse than going into a situation unprepared, especially when that situation is purchasing one of the most expensive assets of your life against a trained property expert in the form of a real estate agent. It's a scary thought, but it is a skill that can be taught. Do you want to learn how to become fully prepared when buying a property so you can get out there, buy your dream home or investment property without the fear of actually messing it up? Scott Agate, the founder and expert property negotiator at Hello House, has been helping people buy their properties by stepping in and negotiating with the agents and saving his clients tens of thousands, and in some cases hundreds of thousands of dollars. Scott has now decided to share all that he's learned over the past 28 years in real estate, so you can go out there and do the exact same thing on how to find a property, analyze that property, negotiate on that property, and transact on it to get the best results. He's created the Get Buyer Ready course, which is a step-by-step guide on how you too can become an expert property negotiator. It's the easy way of how you can avoid all of these agent games and get the best purchase price on that dream home or your investment property. The course is in short bites for busy people with no fluff at all. Just all the information you need to get buyer ready and secure that next property with confidence at the best price. Scott has been kind enough to give our community a massive discount with the link below. Sign up today before you even think about putting an offer on that next property, and it will be one of the best decisions you ever make.
Good old Dan. Maybe this is Dan Andrews joining the. Sorry, Dan. I shouldn't say you. No. I'm sorry.
Dan Andrews is going rogue.
But somebody also asked, have we talked about Central Queensland at all as yet? Unfortunately, we have not, and we did. There was markets that I did want to talk about. I wanted to jump on Canberra, and I wanted to jump on sort of far north Queensland as well. But there's just only so much time I had to prepare for this session, and only so much time we had to present it. But yeah, I thought that was some good comments. So we haven't done that. So Perth, Joe, you're there at the moment, so there must be something there if you've gone there. I mean, otherwise, I don't know why would you go there if there's nothing there?
Why would I bother? Why would I bloody bother? Exactly. So I see a whole heap of value still in Perth. We have had a amazing run up of property prices. It's been unreal. So there is still what I see value and potential in the Perth market. I want to go back to that slide that we opened with right at the beginning, where property prices are the lowest in, well, let's just do it. I'll just share my little bloody screen here. So dwelling prices, 2.5%. Standard average dwelling price is 560,000. People earn more than Sydney here. More than Sydney. They earn $225,000. And the property prices are $560,000. The biggest thing as well, one thing to know is that property is...
Is it just me, Joe? Like, sorry to interrupt. I do it too often. I'm sorry, but go back to those numbers. Like, isn't that insane that those high numbers? Like, I'd love to chat to somebody from the ABS to understand. But you're talking like across Australia, 200,000 household income. That feels like quite a lot. Given that I mean, I don't know. I wonder how they're getting. Yeah.
No, it's combined household income, right? So
yeah, I know, but I'm saying, like, given the average sort of salary in Australia is sort of about 80,000, like, it just doesn't. Unless there's 4 or 5 people living in a house. But yeah, anyway, go back to Perth.
You can
Sorry,
take it up.
just ignore me.
Take it up with the ABS. Take it up with the ABS, mate.
Data people.
Okay, so let's have a look at where are the markets that are most affordable. Perth, 2.5% ratio. What are the markets that have the predicted to be the highest growth potential from a rental perspective? 12% and 15%. Perth. What yields? So that's a consideration, right? The other thing to think about is I was looking at, this is an amazing article. This was created by Macro Business. Not saying that all their posts are absolutely amazing, but they've got
These
some
are the
really
guys
interesting...
that said that Brisbane's in a bubble.
Yeah,
I don't know, maybe it is.
But Lee Van, I actually think it was this exact guy as well that said this.
It is,
Said
yeah.
that. Yeah. So if you
respect
want a
it.
textbook example of why housing policy is broken, Sky News. So Sky News created this. So it's a little bit more reputable than some. Health Minister, this is what I was talking about. This is where I got that Health Minister stuff. 5,000 people are bringing. Now, vacancy rates in Perth are 0.4%. So super low. So this has led to people advertising a mattress on the floor for $300. So essentially, these guys have broken it down pretty simply using Canva. Houses are too expensive, so tell people we must increase housing supply, import more immigrants to build these houses. The houses don't get built, and then the immigrants need somewhere to live, and then the house prices go up, and then house prices get too expensive. So the government policy that we have in place just isn't allowing people, like, it's not the immigration's fault. It's the people that are saying, hey, 5,000 healthcare workers come to Australia. You're going to live the best life. Like, it's ridiculous. So what does this mean? Is it terrible? Yes, it is. Is the population change increasing drastically in Perth? Yes, it is. Net overseas migration, massive. Look at the normal every day, right? So
there's not
lot
that much from interstate though, is there? Like it's in positive now, but I expect it. Like,
neutrally.
just overseas. A lot of overseas are moving to Perth.
Yeah, you're right. But that's a lot of people. So you can see dwelling completion versus population change. So you can see that, yes, we had a big boom of property completions, but that is starting to tick up. But look at how much more population has changed that. Usually it kind of sits within itself, but we're still well out of alignment.
Look at 2013 to 2016. That was excessive amounts of differential between. You were sort of talking about they had in excess of sort of 15K per year over those 3 years by the looks of it. Not for 2012.
And what happened to prices during that time? They didn't move. They just stayed the same because there was more houses available. There was more supply than there was demand. And then come 2019, 2021, and then it started to pick up again. But obviously we had the COVID slowdown of population change, which you'll see in all the charts. So annual house prices for rents are continuing to soar in Perth. It's leading the charge. And from a data perspective, you can't see my screen now, can you? From a data perspective from the ABS, from the CoreLogic has the exact same things. So going back, there is still one of the most affordable markets out there. So I really like it. I think when we start to, you just have to be careful, because where I was buying, like I bought a lot in, we bought, over 100 properties. Where we were buying last year is not where we're buying this year. So I see a lot of value in the more affordable markets. You just need to pick them. You just need to pick the markets that have some potential. So
Yeah,
start looking a little bit.
throw in your comments if you're buying in Perth. Like, are you looking at Perth? Like, who's kind of? It was the second of our poll behind. I think we had like 500, 700 votes. So it was a good little chunk of people voted in that survey.
Well, also,
Somebody
there's
is
a lot
buying
of
there.
comparison with mining as well. Like Perth, 14 years ago, when there was a big kick up with the mining boom, is not what it was. Is not where it is now. Like, it has completely fundamentally shift as a state. Like, I came here 3 years ago or so, for the first boots on the ground adventure, when I started seeing the data kick off, and I was expecting a dust bowl. This place is, I know it sounds a bit ignorant, and this is what a lot of property, people over in Sydney and Melbourne think of this, but it is a fully set up place. Like, I would happily live here. This is a lovely place. It has a lot of infrastructure. Everything is set up, ready to go.
Didn't know you're on
Not for you.
Perth Tourism, Joe. Hey, when am I getting on Perth Tourism?
It's so nice. It is really, and the weather's better than Sydney. Like,
Oh, I
you've
don't know
got the
about that.
Swan River. Yeah,
I
it's
don't
a
know
little
about
bit warmer if you like warmer. Um, so yeah, I'm doing a
Rainfall.
boots on the ground trip down here to confirm my hypothesis. And so far, we've had about 8 to 10 locations that looked potential. We've cut out a couple just because of the boots on the ground confirmation of, you know what, this is not, the data looks good, but the infrastructure is not getting built. The affordability, it's yes, it's affordable, but things aren't growing here. Is there dodgy pockets? Yes, there's probably too many dodgy pockets to drive value there. But how did you go, Jeff? You were having a chat with property managers, talking to them about all of that. How did that go? What are they seeing on the ground here as well?
Yeah, it's probably what a lot of people expected. And I just dropped a comment for Prue from Adelaide. I sort of just remembered that. But what did I get? So I spoke to Ash Goodchild from SoCo in Perth. So I've had her on the show at least once, I'd say once. And what she
And
said
we
was
had
she
Samantha on.
confirmed that, yeah, we had Sam on as well a couple of weeks ago, 3-4 weeks, maybe 5 weeks now. So she said, Ash said Perth was still quite hot. So she didn't confirm it was temperature wise or otherwise. I didn't ask that, but I imagine she was talking about the property market. So she said, though, that home opens are packed and crowded from the sales side of things. What she, interestingly, she said more and more mums and dads, as in locals, are starting to looking to buy with an intent for buying for their kids at some stage, which is just insane that people are thinking that far. There's that much concern given the chronic, the critical lack of listings, the lack of stock on the market. And they're now actually starting to compete and sort of win back. She was saying win back something from over East, as they call us, investors. So over East is your Sydney, Perth, Sydney, Brisbane, Melbourne, those kind of over East investors, as I say. And she said the other week, somebody said, one investor commented, it's like the Hunger Games over there. So if you've seen Hunger Games, that's just a not a satirical, yeah, I think it probably to some extent it is. What she also said and was interesting.
Yeah,
Sort
if
of
anyone's
more
got
of
any
a,
kind of comments or questions, throw them in
what are
now
you
so
seeing
we
out there?
can start to hit them.
Yeah, because we'll wrap it up.
Yeah.
But she said, and concerningly, because when she said this, I was like, oh, that's interesting. What do you think about that? And she said it's a little bit concerning. She said some owners or some investors are starting to overpay, or they are overpaying for properties with the view that it will continue to grow. And yes, it may be
Yeah.
correct, but when does that mindset sort of start to hurt you? She was saying she's seeing people pay 20 to 30, 35K more than what she should, what people would be expected to pay. And as you confirmed, yields, she's sort of saying, are still around that sort of 5.5%, 6%. But if you're sort of one of those people that have overpaid, and you're sort of pricing your property according to that, it will sit vacant. Like because the Perth
What do you?
renters are not. Sorry.
Well, because you overpaid.
Yeah, well, sort of just because if somebody says I need a 6% yield and they decide, oh look, I'm just going to buy this property because I've been looking for 12 months now. I'm just done with trying to buy in Perth. I'll just pay what I need to pay to buy this property, and then they still
Yeah,
want this 6% yield. So they paid 20 to
expensive.
30K more, and they're renting it to get that number, that 6% yield. And
Oh,
the Perth tenants are just saying, well, I'm not willing to pay that, so it'll just sit
yeah.
vacant.
So what's the answer to that? Go to give the market what they want, not what you want the
Exactly.
market to want. Don't
Yeah.
expect
Just because.
people to pay $1,000. I want $1,000 for rent, okay, well the market's going to give you 600, so you're gonna have to deal with that. Sorry, but
Yeah.
still, the rental yields here are some of the highest in the state, in any state. Like it's far higher.
Yeah. I agree. She also said not seeing much rental stress in most areas of Perth. The one interesting was Rockingham, and she sort of said that the highest amount of late rent and that sort of thing is in the Rockingham region, which is sort of backed by insurance company data as well. She said. So it's starting to appear a little bit more in Rockingham. So just be a little. And she mentioned that when we did a live 12 to 15 months ago, she said just keep an eye on what's happening in Rockingham from a rental affordability and rental stress. So what she said is, Ash has been in the game for 20 years, so she's seen a thing or two, seen many cycles in Perth. So she's saying people are still buying in Rockingham, though, reducing the block size. So instead of people were buying 700 square meter blocks, they're now sort of 300 to 350. So which I don't know, I wouldn't feel necessarily comfortable doing that, but they sort of wedded themselves to that Perth. So I'm going to take a bit of a breath now, Joe. But I do. This chat with Ash was literally 15 minutes of some of the most sort of value packed information I've had in a property chat, and we have some pretty good chats. So
Wow.
what are you seeing there anyway, Joe, on the ground at the moment? You kind of said it, but what things should we keep an eye out for that you've seen in a couple of
Uh,
days? What's
yeah.
changed?
So what's changed is, I mean, structurally nothing really changed too much. It's just more about, for me, this boots on the ground trip is about building new relationships in new areas. Dan the man, Mr. Dan Andrews, has come back on here, and he said, realistically, without securing something off market or using a buyer's agent, how much over asking do you need to pay to secure something quality in Perth? It's a very interesting mindset as well. Isn't that
Good
interesting? How
question.
much do you have to overpay to secure something over Perth? A buyer's agent costs $15,000 to $18,000. Are you, and you don't have to do the work. Why are you overpaying by $20,000, $30,000 to save that cost?
I love a bit of
Yeah,
DIY and a BA, so I'm an advocate either way. What Ash did say is that people are still able to secure decently priced properties. It's just taking longer. So you either
right.
have a couple of 3 or 4 options. So yes, there's a BI option, which you can sort of find some fantastic ones out there, some good ones, some great ones, some not so good ones, et cetera, as of any profession. The other thing she said was you can there's the overpay option, or there's the option to simply just be patient. And it's hard to be patient because in
Mm,
6 months you could think, oh crap, I'm missing that capital growth. But if you can actually sort of build that relationship as we sort of talk about all the time, you will find that property that you just have to act incredibly quick. You have to watch some of the live sessions we've done with Scott Agate, with Nikki DeRaker, who's also a Perth agent in the Rockingham region. But you just have to watch some of those things and learn some of the tactics to be able to act fast and be prepared and be professional if you're buying.
yeah, yeah. It's all about moving fast. But I mean, like, I'm very busy. Like, I've got a lot of work to do. I buy properties, and I'm taking the time to fly over to the other side of Australia because there's value in doing this boots on the ground stuff. It makes you tens of thousands, if not hundreds of thousands of dollars. And when I'm spending hundreds of millions of dollars of investors' monies, I need to do this. As an investor, you need to do this stuff as well. So it's like, I'm doing this because there's so much value in these relationships. I see it all the time where I buy a property that's off market, and then it'll get listed, and then it'll go under offer. So if anyone that's looking in Perth at the moment, it's already sold. Don't even bother looking online. Like, I tell my team, guys, don't even bother about what's on real estate. It's all about relationships. It's all about connections. It's all about chatting to agents, becoming their friends. And the way to become their friends, just like what I was saying at the outset of this show, I'm from a small town in the Blue Mountains. Everyone loves a handshake. Everyone, like, all I do on these trips is have beers, have coffees, have chats with property managers and real estate agents to get the best deals. That's the cost that you have to pay. Yeah, you
Somebody said you
overpay once
overpay
it
once
goes
it goes
online.
online. I mean, buying it off or pre-market, whatever you want to call it, is not necessarily the antidote. You just have to you have to know the value, because an off-market deal, which yes, you can get as the average Joe or Jill or Jennifer or whichever name you want to use, or Jeff even. If you're the average, you can get those, but you just have to be really aware of what's sold, and that you're not sort of being sold up a creek because it's off market. Doesn't mean it's absolute gold. So you have to be hyper aware of what things are sold for, and call up the sort of under offer properties, as Joe said many times in the past, to understand, because the market's moving that quickly in a lot of Perth.
Yeah.
I like this. I like this
100%.
one. Dan said, tenanted properties are great properties for BAs too, right? Hard to sell a tenanted property to owner occupier. It can be hard, yes.
So good.
I've actually heard that some owner occupiers they're waiting 6 months because they're that fed up with sort of trying to find something, that they're taking on that sort of tenant and saying, look, okay, I won't move into it now. I'll move into at the end of the tenancy. So that's how crazy it is getting.
Yeah,
Before
well,
we get into
definitely. There's so much value in
Sitting
there's
question.
so much value in getting something that's been rented. Yeah, it's awesome. Sorry, go on.
No. So I'll finish off. So the areas that she sort of, and there was a big
Oh yeah, give us the goods.
write up. I think it was in WA newspaper today
WA
that
Today.
said, yeah, WA Today probably. They said that Aurelia was listed as a top location to buy in WA, and Ash to that, she said she saw that as a higher risk buying that in that area as an example, because prices have moved, and she still is. She said this on a live as well. She said that the type of tenant you attract in those areas, you need to accept that there is going to might be some damage to your property from time to time. Not to disparage anybody living in that area, but it's just a high risk area, and the prices have already moved quite a bit. So by the time it's in the newspapers, you just have to be, and that's in the Kawana kind of region as well, like Palmelia as well, those sort of areas, even Leader as well, those sort of pockets, they're still selling at sort of 450, 500. I've seen those, and I just wonder what people are thinking when they're paying for those properties, that when the property does sort of balance out, what will happen to those areas? I'm not saying in Rockingham will, but yeah, just let's see. Do you know? Somebody said, do you know what councils around Perth are smashing bridesmaid suburbs? BAs are
You're
smashing.
saying what?
I mean,
where are buyers agents smashing? It's a great question.
You can work it out pretty easily. I mean, just kind of chat to some of the agents and say, well, then that's a question. Say, who are buying your properties? Like, is it owner occupiers or is it investors?
Also, it's not just buyers agents as well. It's people that have done certain courses, right? There are courses out there that pretty much tell their people, everyone, this is the area that you need to be buying. And then you get a flock of not tens, you get thousands of people that are flocking to this area that all have the same question. So I call up the agent in the area. I'm like, oh, have you heard of these people? Yeah. It's same questions, answered exactly the same. Yeah.
This is a great question. I say this a little bit. If a suburb has grown over 60% in the past 3 years, but price is still still the same level as it was in 2014, how do we know if it's still got any more left in the tank from a capital growth perspective? Well, my answer to that, I'll go first, Joe, because I'll leave you a little bit of time. You probably got some thought on that as well. So my thoughts are, it probably very likely will still have some left in the tank, but how much does it have? When you're sort of buying at a place that's grown that quickly, where rents are still sort of chasing a little bit, but particularly if we're talking about Rockingham and Armidale, like Ash she didn't raise any major concerns about Armidale, because that was the one that all investors talk about. But she said sort of where rents are starting to cap, can owner occupiers sort of continue to keep sort of paying 550, 600? It's a lovely place, the Rockingham, or can be lovely. I mean, pockets like beaches and all that sort of stuff. People talk rave about it. But how confident are you that it can even grow 60% in the next 10 years? I mean, that's the question I would ask myself. And if I'm confident, if I'm backing myself, backing the data that it will, then that's the answer to your question. I personally would be a little cautious. It'll for the next 1 to 2 years, I feel Perth will still be the top market. Beyond that, I honestly don't know.
Yeah. Prices are still the same as it was in 2014. Has the area got more value than it did in 2014? That's my consideration. Where property prices, can the demographics afford to pay more? What are the overall fundamentals, the data? Where is everything going? So yeah, is the cap of 30% of rents or mortgage? I don't know what that means.
So what it means, 30% rent, income to rent. So like I was talking about in Logan, where somebody's got a median, a sort of average income of sort of 2,000 to 2,300, where somebody's paying $600 for rent, that's roughly at about 30%. And that's sort of where it started to, which is what Jackie confirmed as well. So yeah, I think that's
Love this,
in
mate.
terms of areas. Sorry, man.
Oh yeah, go on. In terms of, you said the word. Go
Yeah,
on. Give us the goods.
She did mention, and again, I didn't dig too deep into these areas, but she said I did have a quick look, and I thought that's interesting. And I've not, Joe, maybe you're going to go to these areas, but maybe you might not. Who knows? I'm not going to. Shouldn't say that. She said
Maybe I'm
a
there
place
right
called
now.
Nolamara, which is near that. Yes, it is near about the KGB kind of region, Kandula, Girraween, and Balga. So yes, there is those areas. There's also the Morley and those other sort of areas that are near Noramara as well, which is we're talking sort of a couple $100,000 price difference between those areas. She's saying that a lot of investors starting to look in that particular pocket. I asked her about Forest Hill because I think there's a good amount of value there. Do your own research. Don't take that as gospel. But she said not so many investors looking there now, but she's sort of saying as they start to trickle in, I thought prices already moved. I looked at it, so I thought investors had started to. What she said was Kelmscott, Armidale, that investors have absolutely saturated the heck out of those areas. So not to say it's going to fall off a cliff tomorrow, but she's just saying, and price is still rising, but just be. And what she said, if you've got a budget of sort of that 600 to 800, she did say a couple of people buying in Belden, Craigie, and she went to a presentation where it said that those for high budget rents are not great in those areas. They're not your sort of 5.5% to 6% in Belden, Craigie, Heathridge, up that's Kingsley. That you're unlikely to get that sort of 5.5, 6. What you'll get though,
they're wonderful areas.
Yeah, more owner occupied sort of areas.
Yeah.
So Joe, that's it for me. Reach out to Ash in the comments.
Yeah, reach out to Ashley Goodchild at SoCo Realty if you want to talk anything property management in WA. They are absolutely unreal. But mate, I want to appreciate it and acknowledge the amount of effort and energy that you've put into this session, because literally for the past week you've been on the phone to every state property managers. So thank you very much for taking the effort and energy to chat to all of those people and get these insights to share it with the community. And that's why that's how we created this group, because people like you want to talk to property managers and learn the goods, and then you want to share it with the rest of the group. So anyone else that finds any great insights, share that in the community. Everyone, the whole point of this is to help property investors become better property investors together. But thank you very much for your effort and energy on this one, mate. This has been unreal.
Shout out to Hannah Gill from Canberra as well. I will drop in the back in the comments, because I did speak to got some insight from her, so I'll drop Canberra. I think there's something in Canberra. It's probably just a little bit expensive and land tax and all that sort of good thing. But yeah. So somebody,
not owning your land.
Yeah, man. It's 80-year lease, isn't it? Anyway, from memory, it's crown lease. So are they not going to renew it? I mean, what's the consequence?
Yeah, it will be all right. You'll be dead by then.
Well, it might not be 80 years from now. You need to check when that lease expires and just consider it. Do we want to top 3 markets? What do you mean?
Well, we just brought that one up. You just did that one.
Was that
let's wrap
this.
this. Oh, okay. Where are your top 3 markets around Australia that you would buy right now, young Jeff? Let's say we have $600,000. $600,000. Where would you go? Would you check in your
hard in Brisbane to do right now? But I would be sort of looking for an absolute cracker deal. I don't mind a bit of a reno, so I'm going to assume I've got a bit of cash left over to do a reno. I'm happy to take that on. You haven't restricted me to what I can do to this property, so I would sort of find something. I mean, I'm probably a bit early for Geelong, or Melbourne, but I do like probably a little bit early. But that's one of my really real dark horses. Perth scares me a little bit, even at sort of that 600 budget. It scares me. Like you can make some growth there. My third market, I don't know where my third one would be. Can I get a time machine and go back 6 months and say Townsville? No, I can't do that.
Go back 10 years ago, buy crypto. Gosnells.
How's that going? How's that going for you?
Gosnells, Armadale, and Sterling.
I don't know about Gosnells and Armadale.
Good luck getting in. Good luck getting in. You're not going to be able to get into those markets whatsoever. They're so beaten and bloody.
For 600 you could, but would you? Yeah. My third market.
Yeah, but should you?
Yeah, no. So as I said Victoria, I said Brisbane. Where else do I want to buy? I'm going to really try exceptionally hard and find an undervalued sort of pocket of the northern parts of Adelaide, and just sort of say, okay, I'm gonna find something. It's going to be hard, but I'm not saying people should do that because it's going to take you some time. But if you've got the inclination and find a big block of land because and make sure it's supplementable. That's what I would do.
Same as me. Right now, if you had $600,000, I'd be buying a great big block in Perth in an affordable location that allows you to own a lot more land, so that you've got some value right now. That area will grow. You've got a good cash flow yield to support the growth, and then own that property. And then in the future, you've got subdivision potential for your buy and hold. If I was doing a renovation project to flip and sell, probably still Perth, actually, to be honest, at that 600 range, if you're flipping it to move it on.
Three suburbs. You're just buying 3 suburbs of Perth, and Perth. Are they for Joe? Are they?
Well, and then if I was doing a development for $600,000, that might be a bit tough. So I'd go down to South Australia. I think you could get some good deals there. I mean, a big block, someone's jumped in here. What is a big block? It's a block that can be subdivided 1 into 2 or 1 into 3, I would say. So like 800, 900,000 square meters, 1,500 square meters, something like that. And then the third, if it's just a nice buy and hold that I'm not going to do anything to, I'm just going to sit on it, I would try and get us in Brisbane, the Brisbane market. So your Moreton Bays or Logan's markets, because that's where you're going to be okay there. You're going to get a solid yield and you'll be all right. So those are the areas that I would think, if anyone was wondering. Mate, this has been an unreal session. Thank you very much for doing that. Jeff Miles of Jeff Miles Incorporated and AUS Property Investors. This has been unreal. Thank you very much, mate.
Thank you as well, Joe. I appreciate you. You really did dive deep into those core logic packs and brought some spicy takes and got the soapbox out. So good on you. I appreciate and I'm looking forward to hearing more about Perth from you. So
love it. Thank you very much. Let's go buy properties. See you guys later.
Thank you everybody for tuning in. Catch you on the flip side. See ya.
Good luck.